Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, welcome to the COB this Thursday afternoon. I'm Juliette Sarli on a day when we have seen a little bit of a risk reawakening around the region. Let's have a look at where the local market is finishing the day. Up by around 0.6%, a turnaround in a lot of these tech players. I know WiseTech is looking very, very solid. And a big turnaround too coming through in Asia. We had South Korea's KOSPI starting the day off with an 11% gain on the open after, of course, hitting that circuit breaker during yesterday's trade. It does seem that markets are eyeing off this news that Iranian operatives have reached out to the US to pursue talks to end the conflict, giving a little bit more of a boost to investor sentiment. So, of course, the themes of the day really are this risk reawakening and the tech turnaround that I touched on as well. I just want to have a look at where the ASX tech sector is. Obviously not as huge as what we know in the US, but it's up 4.5% information technology sector today. And in fact, 8 of the 11 sectors are tracking higher. If it wasn't for the likes of BHP, Rio trading ex-div, the materials sector might look a little bit more positive than it is. We've also got a bit of a switch out of industrials and consumer discretionary stocks. There was that household spending data released today as well. And then we're looking at iron strength with iron ore topping that US $100 a tonne mark. Let's get stock specific and have a look at some of those movers, particularly WiseTech with an impressive 7% gain there, $47.52. A fair bit of movement coming through in the healthcare sector as well, specifically with CSL securing a contract with Canada, and CSL shares were up by about 3%. And I think I just missed some of those iron ore players that there we are. BHP trading ex-div down 1%, but elsewhere looking pretty solid with iron ore futures jumping around 1%. All right, getting into the corporate news, I touched there on CSL. It's Seqirus division to supply Canada with up to 15 million vaccine, shares up almost 3%. The federal court found 2 Star Entertainment senior executives breached their duties and shares down by around 4%. The Lottery Corporation also in focus, announcing a bit of an overhaul and a shake-up on its executive team. And then when it comes to Resolute Mining, it increased its mineral resources by 60% in 2025, while ASX saw a fall in capital raisings, even though trading surged. I mentioned a number of heavyweight companies going ex-div today. Woodside and BHP are feeling that impact, but elsewhere we had Woolworths, Telstra, QBE also trading with outrights to their dividend. Let's welcome to the COB David Lane from Ord Minnett. And David, a bit more of a welcome relief rally today.
Yeah, absolutely, Juliette. It's certainly been a wild week this week, and a little bit of positivity coming through, and people looking for a little bit of value, I suppose, and particularly, as you mentioned in the lead in, the tech stocks have been beaten down for quite some time and sold off quite a bit over the last couple of weeks. So I think a lot of those large tech stocks, the WiseTech, Xero, Technology One, etc., looking relatively attractive in terms of their longer term price. Very, very good businesses. And in most cases, we don't think those businesses in particular will be impacted by the rise of AI. In fact, they'll probably harness AI and improve their productivity. So I think investors are starting to look at those as being good value. The big question at the moment is this a dead cat bounce, or is it the start of a bit of a turnaround?
And what do you think the answer to that is?
Difficult to say at this point in time. At the moment, we're really watching on a daily basis any announcements in relation to Iran, as you said, and what's happening from a global point of view in terms of the retaliation that they're having there. Obviously, that's having an impact on global travel as well. So, yeah, a precarious situation that we're all watching on a daily basis. But for long-term investors, I do think that those tech stocks, in particular WiseTech and Xero, are good value and are excellent businesses, and at current prices do represent a good buying opportunity.
Let's talk about the financial sector as well, because, we've seen Magellan an absolute outperformer today and earlier in the week as well, this merger with Barrenjoey to really try and create, I guess, a competitor to Macquarie, if you will. What have you seen in that space?
Yes, you're right. It's certainly a big change as far as Magellan is concerned. Barrenjoey are going to be part of that business. The Barrenjoey executive team will have about 32% of Magellan as a business, and it's almost really a backdoor listing or a reverse takeover with Barrenjoey being involved there. So really, the investors are starting to reassess what Magellan is and what the future looks like with those two businesses together. And as you said, potentially, a competitor to Macquarie, although Barrenjoey already compete with Macquarie in most of their businesses. It's just they've been doing it in an unlisted form, and this merger will mean that they have an opportunity to be listed. Macquarie is one of those stocks too that we think is attractive. We've seen the share price come off earlier in the week quite a bit. We think at current levels under that $200 mark, it looks very appealing. And Macquarie have a long history of doing an excellent job, being a very well managed business. And in these times of market volatility, that's often when businesses like Macquarie do well and benefit from that. So we actually think that Macquarie is a reasonable opportunity, and that's obviously what investors have been looking at today, because we've seen them bounce a little bit off their lows in today's trading.
Let's touch a little bit on the miners. Iron ore at $100, China really implementing these orderly production cuts. How much further to run potentially could we see here?
Well, I think it's looking reasonably positive for the iron ore miners. Almost 2 years ago, everyone was counting the death of them, and that iron ore was going to fall away with China not growing as strongly. But China's continued to grow at a reasonable clip, not as strongly as it historically has. And the other thing, as far as iron ore and steel production is concerned, is that if this Iran conflict does end up into a more protracted war, that is actually a positive for steel and iron ore, because the world will need more materials. And we obviously don't hope that happens, but investors are looking at what may happen in the future, and that's probably a bit of a positive for the materials and for the iron ore miners in particular.
And any thoughts, David, on what we could see in consumer discretionary stocks, their household spending momentum a little bit softer at the start of 2026? We could be facing more rate hikes amidst this global inflationary concerns as well. Michelle Bullock saying earlier in the week that March is definitely live.
Oh, absolutely, yes. We've certainly got that RBA meeting on the 16th and 17th, and some economists are predicting that we get a 25 basis point rate rise. If we don't get it in March, it could well happen in the next result. But even if we don't get an interest rate rise, the impact of higher energy prices or higher petrol at the Bowser does have a bit of a handbrake on the consumer, because it almost acts as an interest rate rise in itself. So if we do see a continuation of this conflict, we'll be paying more at the Bowser, and that will have an impact on consumer discretion. So it is a sector that has probably been a little bit more resilient than many had thought, but I think that the medium to longer term outlook is a little bit more clouded for consumer discretionary stocks. We saw during reporting season that Harvey Norman came off quite a bit with some softer sales. So I think that's a sector that has a little bit of a concern at this point in time.
David, always a pleasure. Thank you. Enjoy the rest of your day. David Lane there from Ord Minnett joining us from Brisbane. Getting back to stock specifics, we touched on Magellan Financial there. It was the stock of the day on the call amid this $1.6 billion tie-up with Barrenjoey to create that, listed Macquarie rival. And Nadine spoke to our expert Zach Riaz from Banyan Tree Investment, Howard Coleman from Team Invest.
I think the positive culture and the winning culture that the Barrenjoey guys will bring to Magellan, if I was to get on board and to take it to my investment committee, I would say I want more of that influence. I'd want to see more of that influence over the broader Magellan Group, and which is why I think it's interesting the executive CEO or the top job will go to, I think if my reading is correct, is a Barrenjoey, comes from the Barrenjoey side. So positive, I think it's a positive, and we're certainly more open to looking at Magellan as an investment now. So I'd be neutral on it, but I think it's a positive development.
If you look through the history of mergers all around the world, more fail than succeed in terms of adding value. This one may add value, but I'm sure if we asked all our Team Invest members, there wouldn't be one person in the room who'd say, I'm prepared to put my hand up that I'm confident that this merger will work. So if we're not confident that the merger will work being in terms of that the company will do much better, why invest in it? You only want about 20-25 companies at maximum in your portfolio. So I'm pretty sure our members would say, put it in the 2-odd basket, we'll look at it again in a couple of years' time and see how the merger's working out.
You've worked hard for your money all your life. Now your money needs to work hard for you. Whether you're building, transferring or drawing down, the right information makes all the difference. At Ausbiz Retire, you'll find the latest news and insights from trusted experts all in one place. Ausbiz Retire is powered by RAN, retirement income done differently.
All right, let's have a look at the market leaders on a day when we have seen a little bit of a rebound. Viva Energy there looking good. Of course, global oil prices continuing to rise on the Middle East conflict despite data showing US crude stocks climb to a near 1-year high. Magellan we touched on there, the investors very much buying into, I guess David Lane put it really well, that sort of backdoor listing somehow of Barrenjoey on the market. Zip looking good as we saw a rebound coming through in tech, Catapult as well, and Drone Shield after some heavy selling earlier in the week up 11%. To the downside though, we saw weakness in some of the materials players still, Genesis Minerals, some of the uranium players as well, Deep Yellow there, and gold as well. Even though we did see a bit of a rebound in gold prices with the rally in the US dollar pausing somewhat. In the small end of town, American Tungsten had a good day, Satire as well, and Echo IQ up 11%. The laggards in the small end of town include Karma, which was down 21% as well with vinyl, and Yoji, which was off by about 5%. Tonight, we get US weekly unemployment claims, US import prices as well. Earnings continue with the likes of Costco, Alibaba, JD.com, and ECB President Christine Lagarde speaks as well. Just on that US initial jobless claims, the week of February, 215,000 people expected to have lined up for unemployment benefits. All right, let's have a look at tomorrow here locally. It's a Friday, nothing much happens too much on the corporate calendar, but we get a couple of laggards on the earnings session, including Genesis Minerals and Capricorn Metals. Let's have a look at where we have finished the session, up 0.6% there on the CBO 200. The ASX 200 has climbed by almost 40 points, 0.4%, 8,940. Down about 2.5% though since the beginning of the week. Of course, we hit records at the end of February. That does it. We'll be back from 9:45 a.m. Eastern tomorrow. See you then.